Welcome back to another video. Today we're going to be looking at gold against the US dollar. Let's get into it. But before we proceed into today's content, please subscribe, like, and comment. Okay, let's get into it. So we are starting on your daily time frame as usual. So you can see my chart is zoomed out. So let's zoom in and see what has been happening. Okay, so you can see that the market was on a downtrend from this point until here, until it came to this point. And then from here, it went up and it came back again 2 times to test this price level here. And then it's continued from this level, and then it went upwards. It broke this level here. There's a level that was formed here. So the market broke here, sort of like forming another a demand zone here. You can see there was a demand zone here. Let us mark this properly so that everybody can see it. Okay. If you mark this like this, you could see that there was a demand zone here, and then the market came back to this zone, and then it went up. So we can now agree that the market is on a bullish movement on a daily time frame, right? So the market is going up on a daily time frame. Now let us see it can go up until when. Okay, we can see that there is another. We can see that here there is a level, and the market is above this level on today's candlestick, and there is another level here. There is another level here. There is another level here on a daily time frame. So guys, it is very important that you mark and identify all these levels that will be a stumbling block for the market. We have the idea that when the market continues upwards, if it's going to continue going upward, we have an idea that the market might have some pullbacks here, and then continue upside after breaking and retesting this level. And when it comes here, it might pull back, and then same thing we can expect here. Okay, so let us remove all these drawings. Okay, so what matters right now is that we have identified that the market is on an upward movement because it has broken this level here, closed above it, and then went inside this level, and then went back up again. All right, but we can't be confident in that because it's still early. This candlestick, there is a possibility that this candlestick might still close below this level here. Okay, the daily time frame. All right, so we should not go into another time frame with that bias mentality that we're gonna be looking for buying opportunities, because the bullish movement as from here is not confirmed since this candlestick has not closed above this price level. It did break above, but on a daily time frame, it hasn't closed and it hasn't retested. Now, I have spoken before that to be sure, or to have a confidence in trading your breakouts, you must wait for it to be retested at least on a 4-hour time frame, and then you can then trade it confidently. So in this case, we can't have the bias mentality of expecting to only buy this market now, because on a daily time frame it has not closed above this level, this price level here. As you can see here, that it when the market came here, it didn't break, it went down, and when the market came here the second time, it didn't break, it went down. Okay, so let us, even though we can see that there is a lot of bullish momentum, but until the market closes above this level and retest happens on a 4-hour time frame, then we can conclude that, okay, we're expecting only buying opportunities as from now on. But as for now, let us see what can we unpack on a 4-hour time frame, 1-hour time frame, and 15-minute. All right, on your 4-hour time frame, you can see, okay, there was a trend, or there still is a trend. Oh, I love this pattern. I love this pattern. So you see that the market, apart from respecting the trend lines, it's giving us this a triangular pattern or a rising wedge, or rather, but also you see that the market has been rising on this side, and here this is a high, and this high here was higher than this one, and now the market is forming this high here. Okay, so if the market is gonna go up, obviously we're gonna have to see the market retesting this zone and continuing with an upside movement. But if the market is to go down, this is what we would be on a lookout for. We would be on a lookout because this is what happened. This is what happened. Okay. And then now it's if the market comes down here, we may expect to see something like this forming. Okay, so this would be a head and shoulders pattern, but that we can only expect that when the market is taking a downward direction. Okay, but for now, we can't conclude that the market is going to go down. We can't conclude that the market is going to go up. So rather, we just going to draw these patterns that we are witnessing, and then wait for the market to play out the way it will, and then we trade the outcome, obviously. But this is what we should be on the lookout for on the 4-hour time frame. Okay, you can see here this was a very strong supply, and it was respected by the market, even though it was not so much, because the market is on there was a lot of a pulling pressure that is attacking the market right now. So what I'm expecting here is that the market is coming back to this point to retest this level here, and then after the retest, we are taking those buy trades. Let us go down to 1-hour time frame. You see what I've been saying? That this was a supply that there was a lot of a bearish momentum that came from this point here, and the market respected that as a supply zone. So there were bears that came here, and then the bulls came to push the market aggressively, as you can see here. As you can see here, there is a lot of a bullish momentum that came in here. So sort of like canceling all the bearish momentum that came into the market at this point here. All right. So right now, we know that there are more bulls in the market than the bears because of this. These two elongated candlesticks here, but also because the market is on a bullish momentum, is on a bullish movement, we can highlight this level here as a supply, as a demand zone, so that if the market doesn't retest this one, at least we're going to be able to trade this demand zone here. All right, because guys, if you have to know how to trade both supply and demand and your price action. Okay. You cannot trade your supply and demand only. Okay. Even though it's a working strategy, even the banks are using it. If you understand the fundamentals of the supply and demand trading, you will also understand that you need the knowledge of price action. Okay. But there are trades that you can take even without the help of the knowledge of knowing how to the knowledge of identifying supply and demand zone. Okay. So like in here, we are not going to be, if we see a trading opportunity here, it won't be because there is a supply or there is a demand, but it would be because we understand how the price act when it comes to breakout and retest. All right. So here, guys, we're going to wait for a retest. We're going to wait for a retest and then we trade. But here, this is a demand that we're gonna trade. All right, so let's go back to 4 hour, and we're gonna put our positions. We're gonna put our long positions. Gonna put our long position here also, and also here if the retest. If the retest happens. Oh, what's happening now? Yeah. So yeah, guys, this is how I'm expecting the market to play out on this pair. So if you have any, oh man, excuse me about this one. If you have any questions about this pair, or you'd like to say something, you are welcome to do so. Why did I open a 1 minute time frame? Sorry, I meant to open a 15 minutes one. Okay, so guys, this is my analysis for this one, which is a gold against the US dollar. Okay, but let's wait. You do 20% off analyzing, and the rest is you waiting. Okay, so waiting is a very critical and crucial part of trading. You have to wait for your setups. You have to wait for the market to act in the way that you want it to before you trade. Okay, guys, please don't forget to subscribe, like this video so that it can reach as many people as possible. Thank you for tuning in. See you on the next video. Thank you.